Hi, I'm Patrick Adams. Welcome to Market in a Minute. Can this market turn into the 1990s? Can a party like 1999? So we're wondering about that. There's a lot of IPOs in the pipeline. We have SpaceX coming in June. If SpaceX does well, this market could rally, some more, quite a bit here. With all these IPOs coming, it creates money, kind of fuels itself. But for now, we think it's an earnings-driven market. We've recouped some of the PE multiple we lost because of the decline. Now at 21 times earnings, we think that's probably about fair value. Disclosures, please read at your convenience. Market update. So we think Trump has a hall pass. Basically, the Iranian war, it's about over. The problem is the Republican Guard still exists. That's going to be a thorn there for a while. To go back to being a Western-style country like it was many decades ago, you got to get rid of the Republican Guard. I think the market will give Trump a hall pass if he really elects to do this with a coalition of troops to go in there and wipe those guys out. I'm not saying this will happen, but we think there'll be maybe a knee-jerk reaction to it. But we think Trump has the okay by the market because the market can see the end of this occurring. Bank of America reported last week good earnings. The consumer's in strong shape. We wanted to see what Bank of America, how they describe how the consumer was. Delinquency's really not moving up. Their revenues continue to grow, so that's all in fine shape. So it takes out the recession fears. So the economists like Yardeni, who we follow, bumped up his recession forecast. Now he had to bring it back down. There is no signs of a recession occurring. Kevin Walsh comes to Washington on Wednesday. So we think he's going to come across really well. What we want to understand is the balance sheet versus interest rates. Definitely he wants to reduce the balance sheet and at the same time bring down interest rates. If it's not done in a coordinated fashion with good timing, I think it could be a problem for the stock market. So we're listening for that. Valuations, as I mentioned, 21 times forward earnings. That's where they should be. If you come over here, look at this chart, the PE of forward 12 months earnings, we got down to 19 times. That's where we thought we were going. Popped on that, and then now we're close to 21 times. Could it get back to the old highs of 23, 22, 23 times? It could go back there. We think right now it's pretty much fairly valued and wouldn't take something additional to get that PE to expand from here. So at 21 times 2027 earnings, okay, so that gets us to 78.50 on the S&P. So that is 10.6% return from this level. We think it gets much below 10%. Then the market becomes more volatile, more uncertain, has to have more confidence in that 2027 number. But we think as we go through this year, the market's going to build more confidence in getting to that number and hitting that sometime maybe at the end of the year or maybe the first quarter of next year. So the earnings, I love this chart. We showed this to you before. We thought that the stock market would come down to the trend of the earnings line. So this dark line here, this is the earnings here on the right-hand side over a 10-year period. And the blue line is the S&P 500. And you can see how it came down here and hit the earnings line. That was a nice buy point. So I think this is a good thing to monitor. Now we're back up again off of that trend line. But we think that's good support where we got down to the 6,400 or 6,350 on the S&P 500. That's really good support, we think. So looking out, we think that the market's going to move off of earnings. And speaking of earnings, we've got a number of earnings coming this week. Looking back at last week first, JP Morgan, Citigroup, both good. really blow out numbers from the banks. Capital One comes on Tuesday. We're hoping that Capital One can really show us a nice upside surprise and get that PE multiple to expand. We think it could get the same sort of multiple as American Express over time. If it does so, you got a huge move in the stock. So on Wednesday, it's going to be a busy day. We got Lam Research, ServiceNow, Tesla, Texas Instruments. We like Texas Instruments. We bought it around 160. We think that they need to show a cyclical pickup in the earnings to keep the momentum going. So it's kind of broken out here. It's broken to a new high. We think to keep it going, it's going to have to show that cyclical pickup. It is a cyclical semiconductor company. So if they do that, maybe we can get some more appreciation out of it. So 1999, there were a lot of IPOs in the 90s. It kind of created money. So as those IPOs hit, the stocks went up. It created that money to go and do the next IPO or go into other areas of the market. It was a really nice environment. So we see the SpaceX IPO coming in June. It's going to be about $2 trillion of value coming to the market. Obviously, they're not going to go to the market and raise $2 trillion, but it's going to be a small sliver of that. That money can, over time, come back into the markets. So come back in the markets and just keep the machine, going forward. So this is the way that markets can really sustain themselves with appreciation in new companies that come to the market in an IPO fashion. Now the technicals, the S&P 500, way overbought now, right? It blew right through that resistance line. So it was stuck in that 69.70 for a long time. Finally broke through it. Been about 7 months of this consolidation. Off the dip, broke the 20-day and all the different moving averages, 200-day, 50-day, 100-day, broke through that resistance line. Now that what's important here is that resistance line around 7,000 on the S&P. We want to see it hold that. Marvell, this story just keeps getting better. They recently announced an agreement with Google to develop some AI chips similar to NVIDIA. So some competition coming at NVIDIA. So they've got a number of different, partnerships they're doing with these large AI companies. It's been a beautiful mover, well up over 100% from where we purchased it. It's in a parabolic move, which makes me a little bit nervous, but the fundamentals keep getting better. So we're going to see how far this horse can run. So when it finally dies out, we're going to get rid of it. But for now, we think there's maybe more upside to it. It's been beautiful, beautiful move. Why is the market doing this, right? Because they're seeing this as an open-ended story at this point. They don't know how big this can get because of these different partnerships they're doing with the likes of Google and Amazon, as an example. Texas Instruments trying to break out. A little bit of a confusing chart here, but you can see that it broke above that downtrend, broke above the 50-day. We like the 50-day as a good indicator. Obviously had a nice run, pulled back again down below the 200-day, now back above the resistance line here. So like I said, they report earnings on Wednesday. We need a cyclical pickup in those earnings. Otherwise, it's probably likely going to trade back down. If they have good earnings, we're probably going to get another leg up in this stock. Recent moves. So what we've done recently. So we've mentioned, we've gone through, as we've gone through the year, how to play the markets. So as we got early in the year, we got nervous about the markets, particularly when they went after Powell for, criminal activity. Not criminal activity, just stupidity. But when they went after Powell, we got nervous. We put our hedges in place. The markets rolled over, continuing to roll over. We took our hedges off, and then we started buying, really good companies. like a kid in a candy store. We got some really good companies in our portfolio. Our portfolio looks fantastic buying these good companies at really attractive valuations. Then we had some extra cash left around, and the plan was to put that cash to work in the indexes, putting the icing on the cake, right? We didn't do that. Instead, we were talking about last week how the software sector was way overdone, way overkilled, right? It was killed and then killed some more. At here around the bottom, we said, why don't we buy some Palantir? Great company. It was attractively valued on their high valuations because it has huge growth, not a cheap stock. But Palantir and Microsoft to us really stood out. So Palantir got down to that support line and held it. So we purchased the stock, and Microsoft started to rebound again, and we got aboard of Microsoft. Now, neither company we like particularly, for a really big move here in the short term. We think they'll bounce. Palantir's got a shot of maybe going back to the old highs, actually. Microsoft has plenty of room to run, but we don't think that these are particularly misunderstood companies. Microsoft maybe will try to pull everything out to have a good quarter to convince the street that they are, one of the best companies in the world. Palantir, they're growing like crazy, and it's rebounded a little bit, but they have a ways to go. Palantir, the problem there is we need a couple more years to make this stock really reasonably valued again. It's a high valued stock, so we did both of these as a trade, and who knows, we may hold on to them. So if you have any questions of what we're doing, we've got great tactical strategies where I work at PVG Asset Management. But come to my website, Patrick Adams CFA. Sign up for a hard copy of Market in a Minute. We'll send that to you every week. And if you ever have any questions or want to be a client, I know this stuff's hard to follow. We do a great job of buying high quality growth companies tactically. So come look at what we're doing. Maybe you like to have some of what we're doing in your portfolio. And for financial advisors, we're on a number of different platforms. Happy to work with you. Just call us, schedule a call. We can go into detail of how we manage money. Take care.